Good morning. You are watching Daily Markets Outlook for Thursday, 7th of June 2012, prepared by Windsor Brokers. Still positive sentiment, established from last Friday's bounce on the majors is still holding its positive tone as a single currency heads higher and hit levels close to 126 barrier after digesting yesterday's ECB data and levels 125.84, just ahead of 126, with the strong bullish momentum still keeping the focus at the upside. From the other currencies, sterling also extended its rally to above 155, our initial barrier, with this morning's corrective action underway so far on the technicals, and seen to be expected to be supported above 154 level in order to keep the positive tone. Also, the commodities, gold and crude oil, are have ticked lower. All expecting today's Bernanke's comments, Bernanke's testimony that will give us some more clues about future Fed actions. The Federal Reserve's second highest official on yesterday's case for the U.S. Central Bank to provide more support to the fragile economy as financial turmoil mounts. The Janet Yellen, the vice chairman of the Fed, said risks from ongoing housing problems, a weak jobs market, and worsening financial conditions are still threatening the U.S. Economy. Her views carry great weight with the Fed chairman Ben Bernanke, and her comments suggest that the Fed might be close to easing policy again. Yellen said the U.S. economy is growing at around 2% rate, and said the labor market seems to have stalled, and that is before the scheduled year-end expiration of various tax cuts that she said would be another huge drag on growth. Yellen said that there are a number of significant downside risks to the economic outlook, and hence it might well be appropriate to ensure against adverse shocks that could push the economy into territory where self-reinforcing downwards spiral of economic weakness could be difficult to arrest. From the Eurozone, Germany and the European Union officials are now urgently exploring ways to rescue the Spain's debt-stricken banks, although Madrid has not yet requested assistance and is resisting being placed under international supervision. Spain, the Eurozone fourth biggest economy, said yesterday it was effectively losing access to credit markets due to prohibitive borrowing costs, and appealed to European partners to help revive its banks. The European Central Bank dashed investors' hopes of an easing of monetary policy or another flood of cheap liquidity for banks, despite saying that a Eurozone money market has again become dysfunctional. The ECB, as mentioned previously, they left its interest rate on hold at 1% in its yesterday's monthly meeting. The move raised pressure on EU political leaders to outline a solution to the bloc's festering debt crisis at the summit later this month, which is being watched closely in the United States and other global powers anxious about sluggish world economy. From today's calendar, that we are going to take a look, quite a big number of releases, and quite important releases today. We started with Australia, that showed quite a good employment change compared to the negative forecast of minus 5,000 jobs added compared to 15.5 of the previous month of April. Surprisingly, the 38.9 thousand of new jobs has been added in Australia. That was a good prop for the Australian. It's a good prop for the Australian economy. The unemployment rate in Australia stayed unchanged at rose to 5.10% compared to 4.9% in April, but release came along with the expectation of 5.1% today. Still from Japan, leading indicators for April came slightly below the expectation at 95.10% compared to 95.2% of forecast, and the 96.4 previous month, so it came well below its forecast. Unemployment rate in Switzerland also ticked higher. 3.2% is today's release compared to 3.1% of the month of April, as well as forecast for today. The key release of today ahead of after this we have it's been already released, we still don't have the release, inflation in Switzerland for May. 0.1% was forecast and came actually unchanged at 0%. The more significant things are coming from UK. First is services PMI at 8:30 GMT. That is forecasted to drop from last month's release at 53.3 to 52.7. And finally, the Bank of England, one of the key releases today, Bank of England rate decision. No change in the rates, but yesterday comments in the markets saying that despite the forecast at 325 billion sterling for the quantitative easing total that will be released today, some comments, actually a number of comments said that possibility of further increase by 50 billion is not ruled out at this point. So we'll see. 11 o'clock GMT is the release for the from Bank of England MPC about rate decision and the quantitative easing. The statement will follow after the release. US starts with unemployment, weekly unemployment claims that are expected slightly to come at the higher level than the previous release. 383 is the previous 1,000 is the previous week's release compared to 385,000 today's forecast. And the PMI from Canada at 1400 GMT also forecasted lower, 51.8 compared to 52.7. Fed's Bernanke is the actually top event of the day at 1400 GMT, with the Fed's another official local due to have speech at 1610 GMT, and the consumer credit from US at late afternoon hours at 1900 GMT. 10.6 billion is the forecast for April compared to 21.4 billion in March. Now we're going to take a look at major commodities and major currencies and commodities, to see the outlook for the day and the latest movements. As always, starting with euro, that is still in the steady uptrend of last Friday's low at 122.87, with the yesterday's action seen on release of ECB's data, when basically the market did not react much on the release of on the rate decision. However, later on the comments of ECB President Draghi pushed a bit the single currency lower. 124.41 was the floor of this movement, and basically the market quickly digested the comments from the ECB President and bounced higher in its extension towards higher level. Our next upside target was at 126. The pair approached this level 125.84 seen so far, with the mild corrective action seen now. A positive tone and the strong bullish momentum sees potential of a further extension of this near-term corrective action with regain of 120 First of all, the overnight's pardon, yesterday's low at high at 125.84 and the 126.00, 126.20 zone that acts as the next strong barrier. 126 as round figure resistance, and more significant 126.20 zone, 28th of May high. Also the 61.8% Fibonacci retracement of the down move from 128.23 to 122.87. For now, the initial support lies at 125.40, previous peak, ahead of 125. 10-15 zone, where it's 23.6% retracement, as well as 55 days moving average, with more significant support seen at 124.70 that marks Fibonacci 38.2, and yesterday's low at 124.41, along with 50% retracement, and basically loss of the later would be quite harmful for the current positive tone. Further down, another strong static support, 124.10 low of 2 days ago, along with 124.00, 61.8% retracement, and a break below this level in case of a further extension lower would be signal of an end of the near-term corrective action. So far, the positive tone keeps the bulls, near-term bulls in play, and the possibility is quite high for further extension higher, with the levels mentioned, the 126, 126.20 seen next, also 126.40, basically 126.2040 is now acting as a break point, and a break higher would be signal for to trigger possibly further corrective action of the larger downtrend from 132.82 peak of 1st of May, that bottomed at 122.87. On the larger picture, the studies are still in the negative territory, but pointing higher as the RSI emerged of the negative territory, and the pair is approaching a 20 days moving average at 126 zone. A break of these levels is required to open way for a more significant corrective action of the latest 132.82 to 122.87 down move. Sterling also extended its near-term corrective action of 152.67 low of 1st of June that actually found a support just ahead of our downside target at 152.33, annual low of 2012, posted on 13th of January, with current recovery action underway. Not much shown yet on the daily chart. The studies are still quite negative, and basically we need to see the gain of minimum 155, as the pair broke above 155 briefly yesterday, hitting 155.14, but subsequent quick reversal delayed the bullish action. So far, bulls are still not in danger, as the pair ticked below initial support at 154.40 zone, which marks the previous range top, and basically last Friday's spike high on the after release of U.S. jobs data, along with the 38.2% retracement at 154.20. Ideally, this zone is should contain the corrective dips in order to keep the bullish structure intact, with further extension down towards 154, 153.90 maximum allowed. Otherwise, a break below 154 and possible close below this level today might be triggered for a fresh weakness, and test of on the downside very significant supports at 153 at 20, higher low of 5th of June, as well as a long-term bull trend line drawn of 2009 low at 135 that currently stands at 153.00 zone, and that will be quite a bearish signal in case of firm break below 154 and extension down to 153.20, 153.00. On the upside, there regain of 155.25 as our initial barrier will open way for next targets at very significant barrier at 156.00, previous support low of 12th of March, now acting as a strong resistance, and next one's at 156.40 mid-February range floor. That will be seen as the next target in case of a bullish continuation above 155 and 155.25. Dollar yen holds its positive structure, especially that pairs latest price action of 77.65 last Friday's low broke above some very significant points. 78.65 is the 200 days moving average. Also the main bear trend line of 84.08 21st of March 2012 lower top, as well as regaining a 79.00 18th of May low, and the base that so far triggered gains to 79.47, the high seen in the action overnight. Immediate focus lies at the upside with 79.65 and 79.80 zone seen preceding a possible test of next strong barriers at 80.00 and 80.13. The first one is the round figure resistance, and the second is 22nd of May low. That will be our next targets on the upside. On the downside, immediate support has been already tested. 79.27 ahead of 79.00 as the strong support, where is also 55 days moving average, and ideally this level should contain any stronger corrective action in order to keep the upside, immediate upside, in focus. Otherwise, further retracement is and further reversal is not ruled out at this point, with the next significant support being at 78.77. That marks Fibonacci 38.2% retracement, and the previous resistance now acting as support at 78.40 zone, where is also 50% retracement. As positive tone continues to dominate on the lower time frames, possibility is quite high for a further corrective action of the longer downtrend, the larger downtrend of the dollar yen. However, a regain of 80.13 and the more significant 80.60 barrier is required to confirm the base at 77.65 and prevent pair from the further descending. And finally, from the currencies, the Swiss franc, as we mentioned yesterday, quite likely scenario would be further extension of the corrective pullback from 97.69 high, as the corrective bounce of previous low at 95.75 posted 2 days ago failed on approach to our next significant barrier at 61.8% retracement and round figure resistance at 97.00, and subsequent easing interrupted by yesterday's spike higher to 96.47, where the pair manages to leave a lower top and extend the losses. Break below 75, so far reached 95.38. That is between 50 and 61.8% retracement of the uplift from 93.66 to 97.69. Now keeping the downside is focused as near-term studies turn negative. Immediate target on the downside is 95.27 low of 28th of May and 95.20 61.8% retracement ahead of another significant 95.00 round figure support, as well as high of 18th of May, and loss of this zone would be signal for a more significant corrective action, and will put larger, broader bulls of 90.41 on hold in favor of stronger correction. Loss of 94.00 and loss of 95.00 to open next supports at 94.65 and 94.00 ahead of our key short-term support at 93.66, higher low of 21st of May 2012. On the upside, any bounce higher needs to regain minimum of 96.50 in order to ease the current bear pressure, with clearance of the 96.75 required to signal fresh strength and a possible attack at 97 and 97.69 previous, the latest high posted on 1st of June 2012. And a quick look at gold, that is currently still in the sideways movements despite yesterday's attempt higher that jumped to only to 1640 on a break above previous high at 1630, and a quick reversal. The lower keeps the current consolidation still in play, as the downside remains protected at above 1600, where is the current range floor. The possibilities of further extension higher are still in play, especially that 20 days exponential moving average still maintains the current bullish structure, and yesterday's sharp reversal did not manage to break below this dynamic support, keeping the upside still in focus. For now, we need to see the clearance of the previous high, yesterday's high at 1640, in order to resume the current strong recovery of 1532 and open way towards next significant barriers at 1671 and 1680. That are our next upside targets, as the pair already cleared, as attempting actually to break above 55 days moving average. 1658 would be the next dynamic barrier of 90 days moving average, and more significant 1682 is the 200 days moving average on the daily chart, along with the barriers at 1671 and 1680. On the downside, the loss of very significant support at 1600 and also 38.2% retracement of the latest rally from 1532 to 1640 would signal delay in the bullish action and allow for deeper reversal, and basically might bring risk again towards the downside and possible retest of the critical support zone at 1530. Ideally, any reversal above 1600, our strong support and the break point, would keep the current bullish structure intact for possible extension higher. On the upside, the regain of 1700 would confirm the bulls and open way for a possible further extension higher on the yellow metal towards 1716, and the 1790 actually is the next one, peak of end of February 2012. That was all for today. We would like to thank you for attending our sessions. We're back tomorrow morning at the same time at 7:00 GMT. Until then, we wish you a nice day and very profitable trading. Good luck.